circling around.
Okay, it's done circling.
Okay, there we go.
It went around the block already. Okay, great.
Then
All right. So what were you saying about masterminds?
Yes, no, I feel like, this is the power of masterminds. Like, it's not just about the leader of the mastermind, it's about who you can network with and actually learn from, and, be able to do exchange of like talents and information. I think that when we were at the mastermind and we kind of got to talk, like, it was very different talking in person than it is, through the group chat and going through those methods. I feel like when you can actually get in there and talk to people and connect with people, you get an understanding of who they are and the synergies that you can have, that was one of the things that I really got out of our last in-person meetup, because I don't even think we got a chance to talk at the one before that. But this last one, we got a chance to, talk and interact. And like you said, with the activity that he did, it really allowed us to have some true interactions with each other, so you can see like, oh, like, you do what? Oh, okay. Like, how can we coordinate together? How can we help each other out? And that's where the real gold is. Like, people don't really understand how valuable mentorships are, but it's really the gold of who you connect with and what you can actually build together.
That's really cool. Yeah, I really enjoyed the mastermind last month. It was just, like I said, we all got to connect. It was just on a different level. So I really enjoyed that.
Yeah. It was good times, good people. And, and it's motivation too, because some of the people in the mastermind, they be doing some things. I'd be like, okay, I got to step my game up, because
I definitely 100% felt that. Like, that's what I like about it, is like our group pushes us and like challenges us to like do more and go further, and like we get to see how everybody's doing and like what everybody's working on and hold each other accountable. So all of those things I think are really cool.
Yes, exactly. It makes all the difference in the world, because when you have somebody out there to push you to be better, to strive for the next level, to be able to have that win to come back and talk about, like, that is huge. And I really understand this year, like, my focus is the power of partnerships. Like, hands down, that's how I know that I'm going to accelerate and grow my business, is partnerships. Because when you partner with people, you get to have them have an area of strength where your weakness is. And so, and it's not limited to one partnership, but like, even in this mastermind, I'm like connecting with other people because it's making me better. Iron sharpens iron. It makes me, be like, oh, how can I incorporate this conversation, this resource, this person into what it is that I'm doing, and how can I be of value to this person? Like, even with everything that people have going on in the mastermind, as much as I can be a part of it and support, that's exactly what I'm going to do, because that's what I would want as well. So I think there's a lot of power in that.
Really, really cool. Definitely. The mastermind was next level. I'm hoping that this next one that we go to is also going to feel like that much better, just because of all the bonding that we kind of did. You know what I mean?
Right.
So, yeah. And I think it showed yesterday in the virtual meeting too. I want to welcome the new people who came into the room. We have Michael, we have Shaky, we have Abasudu.
Abasudu.
Can you say it again? Abasudu? Is that what I heard?
It's pronounced Abasudu.
Abasudu. Got you.
Yeah.
Welcome. So we are going to get started. I wanted to give people a little bit of time to get here. We are going to get started with Crystal, and she's going to be sharing with us. She's going to be sharing with us a little bit about what she does. So the point of today's, I'm going to get off the Instagram live because I'm getting I'm getting distracted. So today's I'll actually show you guys so that you can see who we're talking to and what we're working on. Let me just pull it up here. Miss Crystal, give you a little background. I'm visual, so I like to have a visual reference in the background. So that's what I'm working on getting for you guys right now. Give me 2 seconds. And then we can get started. And what we're going to do is Crystal's going to do an introduction for 15 minutes. So we'll go up until 6 o'clock. And then we'll have a Q&A. We'll have a Q&A for the rest of the time. So please, if you come up with any questions, write them down. That way we can make sure that we answer them, or put them in the chat as well. And then we can make sure that we actually answer your questions. Okay. So let's pull this up. Screen. Okay, here we go. So here's Crystal Roseman, and the topic for today is laying down the foundation, how to grow from going from 6 figures to 7 figures. At the last mastermind, Crystal and I are part of the same mastermind in Atlanta. We go there once a month. And so we were just chit-chatting a little bit about that. But in the last mastermind that we were at, Crystal was kind of talking to us about these business owners that she knew that went from making 6 figures in their business to 7 figures, and how so many things, arise from that, and how people aren't really used to knowing how to manage that and what to do. And so that's something she's actually working on. And I thought that would be an amazing thing for us to talk about, and kind of, as we all go on our journey, it's always good to know what the next step is and how we're going to get there. So what we're going to be doing today is we're going to be having this free live. And then if you want to do a replay, we can, you're definitely welcome to join the school community. I'll go ahead and put the link in the chat. And that's where you can watch the replay after, and plenty of other videos as well that we work on. So the topics that Crystal is going to be discussing is a plethora of topics, actually. The things she specializes in that I mentioned was, I believe, tax. Here we go. So the building a business, financial strategy, and tax strategies. So Crystal is a financial advisor and planner. And one of the quotes that I found about Crystal that she said is, become more profitable by reducing your tax burden. So we know that taxes is definitely the way that they, that our wealth is taken away from us, or affected. And so obviously making money is one thing, keeping it is another. So she's going to be talking to us a little bit about that. So I'm going to go ahead and pass it over to Crystal.
Awesome. Thanks, Blue. So like she said, my name is Crystal Roseman. I'm a licensed financial advisor of 18 years now. So this is the only career I've ever known. This is truly my passion, because I really do understand that there is a need for financial information from the professionals, right? We see that there's so much information on the internet. The pandemic made so many gurus and people who found financial literacy trendy, and so they got into it and started talking about it. And there's so many different angles that you can really understand financial literacy from. But what I really want to focus on is what I'm seeing recently with the clients that I'm working with. So as Blue mentioned, we were talking about some of the things that I have actually come across with some of my larger clients. So I had one client who is, we've been working together for a while, but they started a new business. This is not their first business. They started a business a couple years ago. They closed that business, went back to work, and then they decided to open up the business again because they learned a lot from that first the first business that they closed, right? So they came back for a second round. And when they did it very, very well. So they have only been in business for a little over 2 years now. And from the start of that to now, they have scaled their business from 6 figures to 7 figures. And what we found was there was a lot of skipped steps when that happened, because it happened very quickly within a matter of 2 years. It's actually less than 2 years that happened. And so they came into a lot of issues that they were not prepared for. They grew very quickly. And so there was a lot of the foundation that they did not have set already in order for them to really sustain that they have. So a lot of businesses fail within the first couple years for many different reasons, but most of them fail because they don't have a proper foundation of how they're going to make income, but also sustain that income. So what happens is we see that a lot of people get to figuring out how to make the money, right? And then once they make the money, they have no idea what they're doing with it. They have no idea where they're supposed to put it. They have no idea how much they're supposed to be spending. They don't have no idea what their profit and loss is. And then they get a whopping tax bill. And when they get that tax bill, they're like, oh, snap. And this is when they brought me in for reinforcements, because they were like, Crystal, we got a very large tax bill. And, you know, of course, they're not prepared for it, right? They don't have that type of money set aside. They weren't expecting that because this is their first major year of making that type of income. And so they brought me in and I realized, oh my goodness, there's so many things that they did not have in place, that they did not have properly done. And one of the things that I want to stress to everyone is, as you are building a company, you are building a business. It's not just a job. You're not just self-employed. You're building a business. And when you're building a business, there are certain aspects of that business that you have to have in place in order to sustain the growth and the momentum that your business is supposed to have. So when you are building a business, you need to have a team. I call it your money team. And it's when you have certain people in place to be able to take care of certain areas of your business. So you do not need to be a jack of all trades. You need to focus on your mastery of your gift, which is how you make your money in your business. Outside of that, there are certain areas that you have to have covered in order for you not to let your business implode on itself. One of those things, so there's 3 major people that you need to have on your money team. That is going to be your financial advisor, that is going to be your accountant and tax CPA, and that's going to be your attorney. So all 3 of those people play vital roles in the growth and sustainability of your company. And this company did not have that in place. They didn't even realize they needed that. They had some, janky bookkeeper that was barely doing their job. They had a CPA that apparently wasn't that great either, because they handed them a very hefty tax bill and said, go figure this out. So the jobs of each of these individuals is to be able to shelter you from the things that you do not know. The reason why you pay a professional is because they have mastered concepts, techniques, and strategies that are special to that arena. And it's not that they're that much smarter than you, they just understand that arena very, very well. So when you go to a doctor, you are not paying that doctor because he's cutting you open every time, but he went to med school for a very long time to learn all the information and techniques and the things that he needs in order to know the human body, right? So any professional that you're paying for their expertise in that area. So it's not about you knowing everything, it's about you having people in place that know what they need to know. So the purpose of having an attorney on your team is so that they can help go through all the contracts, all the legal documents, all of the agreements that you have in place, as well as the structure of your actual entity, right? When you go to set up your business, whether you're setting up it as an LLC, if you're going to be taxed as an S Corp, if you're going to be a corporation, a C Corp, all of those things, those go through an attorney. So when you have agreements, you need to have an attorney to be able to look over those things to make sure you're not getting shafted. Because in business, you're going to be in some type of legal agreement with somebody, either your clients or your suppliers, or other business partners, right? So you're going to need to have someone who is on your team who is going to look out for the information that you need to know to shield you from entering in something that is not of your best interest. So it's very important to have an attorney on board. They also can help with other things like estates and wills and trusts, depending on their area of expertise. But at the very least, they should be able to oversee any contracts, any documents, any agreements that you have as a company, so that you do not end up messing yourself up legally by agreeing to things and putting things into place that will end up hurting you in the long run. So that's why having an attorney is very important. Having a CPA is important because they need to be able to implement your tax strategies. So a CPA and an accountant should be working together. They may be the same person, but they may not be. So a good CPA knows your numbers. And I can't tell you how many times I've talked to entrepreneurs and business owners, and they do not know their numbers. They do not know how much revenue they're generating. They do not know how much profit they're generating. They do not know what their operating expenses are. They do not know how much they should have as a floating amount of revenue. So they just make money. And when bills are paid, if they got something left over, it's a good month. And that is a recipe for disaster. If you have a business, you should have in the bare minimum bookkeeping in place. The purpose of bookkeeping is to keep the books. It is to tell you what is coming in and what is to go out, right? So when you look at that, that is what's going to tell you whether you're being profitable or not. Because what you don't really see is all the time, the energy, the effort that you're putting into your business that may not be attached to a dollar amount, but all you're seeing is what's in the bank account, and they do not always correlate. So you need a profit and loss statement to even be able to show how much you're actually making from month to month. You should not ever be surprised at your tax bill. And most people don't think about that. They get to tax time and they are like, wait, what? Like my clients were, right? They got that tax bill and they were like, went through the floor, right? Because they had no idea that that was going to be the tax bill. Now I got them connected to my CPA, who is bomb, got them set up with the bookkeeping, which is amazing. And the CPA is able to tell them every single month how much money they have in that account as far as profit is concerned, how much revenue they have generated. So he can tell them all throughout the year, okay, y'all have made $360,000 so far. You know, how do we want to disperse this, right? That comes in very, very important, because when you're doing tax planning, you need to know what you're working with. You need to know how much money you actually have, how much revenue you've actually made, and how much you're going to be taxed on. Again, sharing your taxes is not going to be a surprise. You should not be surprised at what your tax bill is when you get it. You should already know. My clients know before the end of the year, when we're having that quarterly meeting in the last quarter, this is where we are in revenue. Now, from that, now here comes the tax strategy. How do we get that bill down? How do we implement tax savings? Because you have to do it in the year that you're getting the tax savings. You can't do that after you find out on April 15th how much you owe. You have to do it in the year that you're being taxed. So that's where you are given that information. Oh, okay, I have an extra $200,000 that I need to account for. So I'm either going to pay taxes on that $200,000, or I can work to get that $200,000 down to a much lower amount of taxes. So that's where the third person comes in, which is moi, your financial advisor and your fractional CFO. The purpose of having an advisor on your team is so that I can come in and analyze all of those aspects of it and see, okay, you have $200,000 that you have of taxable income. These are the methods and the strategies of where you should put that money, where you should actually allocate it, and what the purpose is for you doing so. It's very easy to just spend money. It's very easy to say, okay, I'm gonna go buy a new car, I'm gonna buy a new laptop, I'm gonna buy equipment for the business. That's all fine and dandy. But the job of a financial advisor and your fractional CFO is to actually get in there and tell you how and what's the best strategy to use that money so that you can actually build wealth. It is not just about you making money, because so many times we're making money year over year and we don't have anything to show for it. So my job is to tell you where to put that money, how to allocate that money, and the purpose of that money is to actually build wealth. So what type of assets are going to make the most sense for you to actually put that money away? So those are the things that are going to be listed as part of the foundation of what you're doing to know how you grow and scale. Because if you have a six-figure business and you're moving towards that seven figures, you have to have a foundation to know exactly where that money should be going. Because anytime your money does not have an assignment, it's going to go out the window and disappear. So you have to know exactly what you're doing with it and what the game plan is. So when we talk about foundation, we're talking about what is the actual idea of what you're going to do to build wealth. We are not in this just to continuously chase a bag. When we talk about financial freedom and independence, that means that you have enough assets that will sustain you and pay for your expenses and your lifestyle. There's different levels to that. There is the foundational level, then there's the comfortable level, and then there's the FU money level, right? That's where we are all trying to get to, but you have to understand what the journey is to get there. So when we talk about foundation, we have to understand what it's going to take, what type of people and systems we're going to have in place in order to accomplish those goals. You do not get to seven figures by happenstance. You have to be very intentional about what you're doing. So you have to understand what type of people you're going to need in order to grow your business, because you can do so much when you're in the six figures range. When you get into the seven figures, you have to learn how to delegate. You have to learn how to hire. You have to have a system in place for management. And it's actually easier to hire from the top down than it is from the bottom up. And so here's what I mean by that. If you know that you're going to need certain team members on your team, if you can afford it, it makes more sense to actually hire the manager so that the manager can go and hire the people that are needed on your team. And the reason for that is because they lift the burden off of you automatically by taking on that responsibility. So you want to put somebody in place that is going to lift your burden so it frees you up to focus on the thing that you are good at. So as the business owner, you have to learn how to delegate. But the only way you can delegate is if you have systems in place. So when we talk about systems in place, we need to have the systems that are used to run your business so that when somebody comes in your absence, they can automatically jump in and start running the business. So the more successful you get, the further you should be removed from your business. If you are the key component to your business, you do not have a business, you have a job. So you need to be able to learn how to put people in place, and you need to learn how to have the proper systems where the company can run on its own. That's the time that you have a business. What you really have to understand is that a business is supposed to be an asset, but you have to make it an asset. The only way that it's an asset is if it can run without you. And we have to think and model our businesses after big businesses. We cannot say, oh, this is just me right now. No, we have to think of the whole package. So when I talk about whole package, I'm talking about benefits as well. I help business owners set up 401ks all the time, help them set up health insurance, help them set up life insurance, because it's very important that you have all of these things in place, because you as the business owner want to attract the best talent. The way that you attract the best talent, because you possibly are not paying the highest rate, but if you can add additional things that are benefits to those people, then that's going to benefit you attracting good talent. So adding a benefits package is well worth its weight in gold. I know people think that, oh, this is expensive and I can't afford it. You can't afford not to. You need benefits just like your employees need benefits. You need to have a retirement plan. You need to have life insurance. You need to have health insurance. And so you want to be able to put these things in place and understand that these are also tax deductions. All of these expenses that you are paying for in your business is a tax deduction for your business. So you get two folds, because you get to benefit from the benefits, you get to attract higher talent, and you get a tax deduction for doing so. So we have to think about the bigger picture. We have to think about what is going to free me up to make more money to cover these expenses that I'm afraid to pay for. If we think of it that way, then it allows us to say, oh, okay, I can't spend half of my day doing this administrative task. I need to hire an assistant to do that for me. That way I can use those 4 hours to go and make some more money. Or even if you're not physically doing the activity, it releases your brain capacity to think of other ways to be able to go make money. So it's not necessarily that you have to be moving and shaking every minute of every day, but you need to be freed from those small tasks that are taking up your time and preventing you from moving to the next level. So if we think about things like that, putting those people and systems in place, we are laying the proper foundation for what you need to do in order to move to 7 figures. Because at the end of the day, you always want to structure your business in a position to where you could sell it as an asset. If you can sell it, then it's an actual business. But the only way you can sell it is if somebody else can come in and remove you from the business and run the business without you. So I know I went over my 15 minutes, Blue. So I'll try to get it all in.
No, you guys, listen, put a fire in the chat if you enjoyed what she was saying, because for me, I had so many takeaways. I think that, like, out of this, there's just so many bars that you drop. So I don't even know where to start, because it was just so good. Like, I thought this was so good. The money team, right? Not Floyd Mayweather, but your money team, Crystal. You said that people need 3 things. They need a financial advisor, they need an accountant or slash CPA, and an attorney. Like, bare minimums. If they're into is this at the 6-figure or at the 7-figure realm?
At the 6-figure, they need that to prepare for the 7-figure.
Got it. So you need this at the 6-figure. You hit 100K, you need to get a financial advisor, you need to get an accountant, CPA, and you need to get an attorney, right? So I thought that was great. If you guys have questions, put them in the chat, raise your hand, come on video if you'd like to show your face, that would be great. I'm going to try to recap some of the things that you said, because I know that some people came in a little bit later. But let me start with a question though. So you said that one of the bookkeepers for your client was not that great and the CPA was janky, because when the tax bill came, they didn't know, they had to go figure it out. And so I know you explained kind of like what would have been a better approach. I heard last quarter, this is when you're having the conversation. This is when you're prepping. Where is this money going to be moved? How much do we want to pay taxes on? How are we going to allocate these funds? Like, that's a great thing to know, that it has to be done quarter 4 of the year that you're filing. But the bookkeeper, how do we know a bookkeeper is not great? And how do we know a bookkeeper is good?
Yeah, so the key indicator is whether you know what your numbers look like every single month. At any given time, you should be able to either receive a report or go into their system to see where we are this month. So, hey, I'm on day 10. Am I on track for this month? I'm on day 23. Am I behind for this month? You shouldn't get to the next month and be like, oh crap, I can't pay my bills because I didn't make enough money. You should be able to know throughout at any point in time where your business is, what you're on track for, but you have to know what your goals are, right? What your targets are. If you have payroll, if you have overhead, if you have expenses, you need to know what those numbers are. So you already map out what your goals are every single month. Hey, if I got to make $10,000 every month profit, right? That means I got to make, let's say 15,000 in revenue in order to profit that 10. You need to know those numbers, and you need to know where you are anytime throughout the month, so that if you're behind, hey, I got to get on the ball. I got to get some more deals. I got to get some more clients. And that's where the strategy part of it comes back in, right? When I'm talking about how we are allocating funds, right? If we have a phenomenal month, you only needed to make 15,000, but you made 25. What are we doing with that 10? But you don't think about that. You just like, oh, it's a great month, I'm gonna go to Miami. Like, that's not how we are supposed to operate, right? So that's the key component. And you can do bookkeeping yourself. QuickBooks and all that is available. So I'm not saying that you have to have a bookkeeper, but you surely don't want to be paying somebody and you don't know the answer to those questions.
Okay, very good point. I really appreciate that. A jam-packed answer. I love that. You definitely hit the nail on the head. It's about kind of like maintenance and preventing versus like trying to fix something after the fact, right? It's getting ahead of things in order for you to not get into a problem. Again, if you guys have questions, you can raise your hand or go on the chat, or come on video if you'd like. Okay, so what are the other things that you talked about? So if you said if you're a business and let's say you can't get an attorney or a CPA right now, the minimum you should have is bookkeeping, right? That's like the bare minimums. Have your bookkeeping. And is it something you manually have to update, or is it something that's automated? Like, how does bookkeeping just sounds like a nightmare to me. So do you do bookkeeping, or is that not your realm? Like, I also don't want to have you talk about something you don't do.
So no. So bookkeeping can be very simple through bookkeeping systems. So if you don't want to, if you're not at the place where you're going to hire a bookkeeper, and that's when you get to that place, you'll know it. Trust me. So when you need a bookkeeper, that's when you got too much going on and it's too much for you to handle and keep up with. But when you are starting out, when you're, in the beginning of your building of your business, you can use things like QuickBooks. QuickBooks is a very friendly system as far as being able to connect your expenses. So the way that QuickBooks works is that you actually can connect your cards or your bank accounts to the QuickBooks. So it's pulling that data. Now, what you will probably have to do, especially in the beginning, is go in and kind of recategorize certain things, because it's going to pull it and put it into certain categories. So that is the main thing. So I would say to do that at least once a month. It doesn't become, you don't want to take too long so it becomes overwhelming. So what happens is a lot of people will just not look at it and they don't know what their expenses are. They don't know what they got left over. And like with that client that I'm talking about, with the janky bookkeeper, when we got to the good CPA, he was like, oh, they've spent more money than they should have this year. And when I talked to the client, they were like, I had no idea. They had no clue that they had overspent, right? Because again, there was money in the accounts. So if I'm not overdrafted, what you mean I'm spending too much money, right? But in the grand scheme of things, we know that one, you need to be putting certain money away for certain categories. Taxes is a category that you need to prepare for, right? So now if you spent all this money and then it gets around a tax time and you got the tax bill and you're not prepared for it, then you're in a bad situation. So that's what I mean by, doing bookkeeping, because then you know what's actual profit versus revenue, because those are two very different numbers. You can have a good amount of revenue and have very little profit. You could have revenue and be at a loss. So that is really important. You have to know your numbers. So if you're doing bookkeeping yourself, at least use a bookkeeping software like QuickBooks, and so that it can at least pull in that data from your transactions, from your bank accounts, from your credit cards, so that it can categorize it for you.
That's excellent. I have other questions, but I want to open the floor for anybody else who may have a question. If you'd like to come off of mute and ask a question, please do so. Or if you want to type it in the chat, please do so as well. If not, I will jump in and ask another question because I do have one. Crystal, how much do you charge for a consultation? Like if somebody wanted to ask you questions and stuff like that, what does that cost? Is that like a complimentary thing or is there a fee?
So I do a discovery call, which is complimentary. It's a 15-minute call just to kind of see what your situation is and what you are looking to do. And then if you employ my services, then there's different packages for that. So
okay.
So it just varies on what you are needing, but the discovery call is complimentary.
Okay, perfect. So if anybody wants to book a discovery call, right? Maybe somebody doesn't want to, money is like a taboo thing, right? Maybe somebody doesn't want to discuss kind of like where they're at or what things they may be struggling with or, you know, whatever it is. So definitely feel free to reach out to Crystal. How can they reach you, Crystal? What's the best way for them to reach you?
The best way, I am in the Facebook group, so you can definitely connect with me there. But my Instagram is the easiest way to get to me. So it's just Build with Crystal on Instagram, and you can shoot me a DM. My link is also in there as well in my bio, so that you can schedule a meeting with me as well.
Okay, great. And I put it in the chat. I put the free Facebook community link there. And also, if you want the replay, there was a lot of really good information here. Definitely join the school community. It's only $97, and you'll be able to watch this video as well as many others. And let's see. So my question to you is on the real estate side, right? As a real estate investor and coach myself, my questions are more like, for real estate, like for example, for me, for my properties, I have like a stack of folders for each property. So, oh brother, so like this is my stack of folders for one property, right? And so I have those for each of them, and I also have a bunch of stuff digitally, and I'm pretty sure that I can improve my processes. And so my question is, as like an investor, if an investor has like a portfolio of maybe, you know, 2 properties or 3 properties or anything like that, a lot of people don't think about that, but that's a business, right? Like those are under LLCs, and they have revenue and they have expenses, and you have taxes to pay, and you have depreciation and all these other things. So does it make sense for a real estate investor to hire a financial advisor?
Absolutely. The reason for that is whenever you have a business, you're making money, right? And whenever you're making money, you need to have a plan for that money. When we think about building a real estate portfolio, you need to look good on paper when you're getting these mortgages, when you're getting these loans, right? Like, yes, there's the investor loans and the hard money loans and all of that. That's fine. But when you go to refinance, when you go to get that money back out, you need to look good on paper. So people tend to skip over that step, right? They just go straight to, oh, I can get the property, I can acquire the property. But when you go to get your money back out of that property, you need to be able to be qualified. You need to be able to be approved for it. So the way that your business is structured, the way that you're being paid, the way you're showing income, the way that you have, money in reserves, all of those are requirements when you go to refinance or when you go to get a mortgage, right? People don't think about the whole process of getting approved for a mortgage. You still have to qualify income wise and things like that. Now, there are other, loans and things of that nature that are out there, but in the grand scheme of things, you need to know what to be doing with your money, because not only are you actually using it to purchase properties, but you can leverage that money in different ways. So there are strategies that you need to know about in order to make sure that you're maximize your dollar. Like my whole goal is to maximize your dollars. We do not want money sitting there idly. We do not want equity sitting there idly. We do not want to have money not working for you 2 and 3 times over. That is the whole purpose of having a financial advisor, because I'm seeing it from a financial lens. When you are a real estate investor, you're focused on the real estate. But when you're talking to your financial advisor, I am looking at it from a financial lens to say, hey, this is part of your portfolio, but how do we leverage this portfolio? What is the end goal, right? How are we doing these exchanges of properties, right? Are we doing a 1035 exchange? Are we sitting there on this property? Are we trying to pull equity out of this property? Are we using this property, to have a tenant? Are we planning on selling this, right? So I'm going to be able to help you understand how all of these moves are going to affect you on taxes, how all of these moves are going to affect you estate-wise, right? Having a property in an LLC and being able to get a loan against it, that's a whole conversation people don't even talk about. Having, people talk about putting properties in trust, things of that nature. That's a whole conversation that needs to be had, because there are financial ramifications for putting a property in a trust. And it could be good and it could be bad, but you have to know what that is. Depending on your situation, it may or may not make sense for you to do that. That's what having a conversation with your financial advisor is going to uncover for you. When you're talking about what your end goal is, if your goal is to build up this real estate portfolio, let's strategize how we're going to do that, right? How much capital do you have to put towards that? Are you willing to do partnerships? Are you willing to do wholesaling? What is your value add, right? What type of people do you need to be in conjunction with? What should be your end goal? Because let me tell you, if you are a real estate investor and you have an office and things, one of the goals should be to end up acquiring a commercial real estate property, right? So that you could house your office out of a building you own. But there's a whole strategy to that. There's a method to that madness of how do we get to that point. So it's not just you wake up tomorrow, oh, I want to be a commercial real estate owner. There's steps that you take to get there. And then I'm also coordinating with those other 2 people of the money team to make sure that everything makes sense. And here's what I mean by that. When you have a tax accountant, their purpose is to look at the numbers. My purpose is to interpret the numbers and put them into your plan. So the accountant is going to see what you're doing, and they're going to see how you're doing it, and they're going to figure out, okay, if I can categorize this expense as a business expense and put this money over here, then I can move these numbers. I am translating that information to say, hey, my client wants to do X, Y, and Z. They need to be able to be fundable for next year. So they need to show a certain amount of income. Let's figure out what that number is. Let's figure out how that is, because one year we wiped out the tax bill, right? But then the next year we need to be fundable so that we can buy another property or buy another business, right? So these are the conversations that are being had between me and the CPA, so that I can help him understand, okay, this is what the client needs to be focused on. So this is the way that we're going to do it. So we're not going to reduce the whole $200,000. We're going to reduce it down to $100,000, because that's going to be enough to show for him to be fundable versus him paying taxes on $200,000 unnecessarily, right? That's the type of conversation that we're having. So when we're talking about real estate, you need a financial advisor to help make sure that you're not shooting yourself in the foot by doing too much, so that you are not fundable to be able to get the refinance, or to be able to get the mortgage, or to be able to, get money in equity out of the properties.
That was amazing. Like, I don't know. If everybody isn't calling you after this, I don't know what's going on with them. I don't know where they're working at. I don't know everybody's story on here, so it's kind of tough. I know my students who are in here, but we do have some new people, so I don't know what everybody does or how we can best serve them. But if you have questions, please put them in the chat. We have about 5 minutes left. And wow, Crystal, like you're literally doing everything. Like we go to our accountants, and like I have a CPA accountant. He has a master's in taxes. I'm actually going to have him speaking. And we go to them and we're like, what should I do? Should I do this? Should I do that? And like we're asking all these questions. Like technically they're not really there for that. Like they're there to just like do the actual work of filing your taxes. Like you said, moving things around, but they're not there to strategize with you, right? They're not there to try to figure out how to do a strategy. So this is the part where like you come in with the brains and the analytical aspect and like, okay, this is what they want to do. Here's what we should move around, or this is, you know, this is where we're trying to go. This is how it should be structured. And then obviously I'm guessing the attorney comes in to see if there's any other, I don't know, what is it? You said it earlier.
So yeah, the attorney's job is to come in to be able to review any contracts. You don't want to get into anything that would actually affect you legally, right? Like you know, you may have contracts with your clients, you may have contracts with the with your vendors, with your product suppliers, things of that nature. So you need somebody who's going to review those contracts and make sure that you're not getting the short end of the stick.
Okay, we do have a question. We have James with the question. Go ahead, James.
So I have two businesses. One is 3 years old and one is 18 months. And my question is, who do I speak to about? Well, let me back up. The older one is a holding company and it owns the second company. And so I was told that my holding company, that I would do best by changing it to a C Corp, because right now both of them are LLCs. Who would I talk to about, I guess, business structure? Who's the best type of person to talk to about that?
So you want to deal with, when it comes to business structure, you want to deal with
James, I'm just gonna mute you because the background noise is a little. Okay, thank you.
Okay, so a CPA can actually do structuring for you, but going through an attorney is the best person because they will know the legal ramifications of how it's structured. But when it comes to holding companies and C Corps, the CPA is going to be the one who tells you how all that tax works. Because when it comes to a C Corp, there's certain requirements and certain filings that have to be done, and that's done through your CPA. So you want to know all of that before you make that decision, because with C Corps, they can help you save on taxes if you're doing it right, but only if there's a certain amount that you have coming into the business. So it really depends on your numbers, which is why I say the CPA, because the CPA should know your numbers and they should know what your tax situation is to be able to tell you, yeah, that makes sense to change it to a C Corp, or no, that's going to hurt you, because there's going to be certain requirements that a C Corp has that an LLC does not have. The same is true for an S Corp. A S Corp is going to have certain requirements that you have to do that you don't have to do in an LLC. So like I talk about those things in general numbers, but again, the CPA is going to know what your actual numbers are, what your actual tax situation is, and how those changes are going to affect your tax situation. Because that's what it boils down to.
So you're saying, well, let me say, I'm not making a lot of money, barely 5 figures. And so I should first talk to a CPA first to see if it makes sense for me to do anything.
Yeah, I don't see why you would need to change it to a C Corp if you're not making a lot of money. A C Corp is a strategy that helps you save on taxes once you get into a very large amount of revenue. But if you're not there yet, I don't see why you would need to.
So really quickly, because there's a lot of misinformation out there, James. So I'm wondering what kind of business you're in, because obviously somebody advised you, right? Somebody said, hey, in order to do this business, open up this and then create a holding company, or whatever the order was. Can you tell me what kind of business you're in? Is that possible?
Yes. So hold on. Let me turn this here.
Thank you.
Cosby lovers. Well, anyway, the first business is more or less holding. It owns multiple. So the goal is to do investing, capitals, and own different businesses. And so, um, just watching the internet, I was told that have one LLC own the other LLC. And so the second business is a retail business. I create custom fedora hats. And so,
Okay.
listening to Derek Whitehead and some other people, they were like, "Yeah, you should get a C corp because of this and protection and this and that." And so that's why I asked the question. Then I was told to get an S corp, but I know I don't make enough money to switch over to S corp to save taxes. And so I'm just asking the question so that when I get there, I at least have some kind of sense as to who I need to be speaking to.
All right, let me jump in really quickly. So let me just show this. Are you able to see the screen if I put something on the screen? James? I don't know if you're on a phone or if you're on a computer.
I'm on my phone. I can just see
Okay.
you and the people who are in the group.
Okay, so if you scroll, you should be able to see the screen I'm going to show you now.
I see it. I see it.
Okay, so this is the 10 Figures Club. This is where the replay will be available. I just want to show you guys really quickly. Oh, I have to log in. Oh, I didn't know that. All right, well, my bad. Just give me 1 second. I'm logging in. Okay, so I just want to show you guys really quickly, because I did go over this in here. And one of the things that I went over is setting up your business, right? So I do a walkthrough of how to set up your business. Yes, you can go to a CPA. Yes, you can go to an attorney. I'm not saying you can't, but I actually went through this. So, really quickly, just off the top thing, really if you're making under $13,850, you don't even have to report your business income because it's not taxable. Is that correct, Crystal? According to the IRS?
Well, that's saying,
I mean, if you exclusively only make.
right, exactly. If you have no other income and
Yes,
your
correct.
income, yeah. So it's a standard deduction, which this year is like 14,000 and some change. But yes.
So I always tell people, start a business, forget about the structure, just start a business, make 14K, and then go register it. Now you're in business because now you have something that's taxable. And probably that goes against what you think, Crystal, because you're like, get ahead of it, prepare, do it right. I get it. But a lot of people go and, for example, set up these structures. So he has a holding company, he has another company, and he said he's barely making XYZ, right? And I don't know how much that is. But if you're a single person, it's around 14,000, like Crystal said. Look it up. If your head of household is 20,000, if you're married, it's 27,000 for both spouses. So if you have other income coming into your house, then yes, obviously. The name of your business counts, but the point that I wanted to get at is the business structure. Okay, this is the point, James, that I wanted to kind of get at. So let me, oops, dang it. Hold on 1 second, guys. Okay, so let me show you this. So the business structure that you have for options is sole proprietor. That's when it's just you by yourself. A partnership if you're working with somebody else. A corporation that has a higher taxation, and I think you have to be at a certain income level to do that. Limited liability companies if you want to protect some assets, and obviously consult with an attorney. I'm not an attorney. I'm just giving you general information. Or you can set up an estate, a trust, a tax exempt, or a government organization. So this is when you go to get an EIN, right? And I walk you through all the steps in order for you to build business credit, right? So that's one of the things that I put up in my school community. But my point is, a lot of people say S Corp and C Corp as if it is a business structure. It is not a business structure. It is not the way you set up your business. It is the way that you file your taxes. And so that goes through your CPA. They're going to decide based on how much money you make if you're going to file as an S Corp, a C Corp, or anything like that. Okay, so that's not really something that you can go out and get registered for. Does that make sense, James?
Yes, my CPA did suggest, but I don't know why she would suggest that I did that. So for my own personal job, I'm making six figures, but for my business, I wasn't. And so she was suggesting that I file as a S Corp. But then after listening to some different webinars, I was told that if I'm not making 40,000, then I shouldn't even try to do S Corp, file for tax purposes. So I don't know. That's why I'm asking.
Yeah, no, yes, that's a general rule of thumb. If you're not making over 40K net, it does not make sense to file an S corp because the expenses of it outweigh the tax savings. So until you get to a certain threshold, it's not going to be beneficial to you tax wise, because when you do file an S corp election, you have to put yourself on a payroll. So you got to pay for a payroll service and all of that. It's not worth it until you get to really making money.
Okay.
And obviously we can't see the full picture. So like, we don't know what assets you have or anything like that. Or if your CPA had some kind of idea of like having you write off some of your work expenses. We can't really tell you anything, right? Until you actually see the whole picture. But did you have another question? Go ahead. I'm sorry.
No, and that's what I was just saying. That's why it's important for you to have a team, right? Because if I'm your advisor, then I can coordinate with your CPA to understand why they're saying to do that. And then we can talk back and forth and say, oh, okay, this doesn't make sense in his situation, or this is the reason why. Now that makes sense. So now we can incorporate it. So that's how you do. That's why the money team is important, because it helps because again, I help translate what the CPA is saying, because oftentimes I have the exact same issue. Their CPA tells them something and they're like, I have no idea why. And I'm like, yeah, it don't make sense. And this is why I'm telling you not to do it, X, Y, and Z, because of this situation. But if you have us working together, then it's easier for me to talk directly to the CPA so I can get an understanding of what they're seeing and what they're working on. And then I can come back and translate and we can coordinate that together.
And she can tell you, you should probably look for another CPA or something like that. James, did you have another question for us?
How do I get to see what you or get in that group? Is that something?
Yes. So I have it in the chat. I put the free group and the paid group in the chat.
Okay.
Yeah. So
in this
really
chat
quickly,
or the 1%er chat?
Oh, you're in the 1%. So I did not put in the 1%. I can message you stuff. If you're in the 1%, I'll send you a message on the 1%.
Okay, thanks.
Are you the new guy who was on the video yesterday in the meeting?
Yeah.
Okay. Nice to talk to you again, James. All right. Yeah. So thank you. So all right. So Gerald had a question. I wanted to make sure. James, do you have another question for Crystal?
No, I'm done.
All right. Thank you so much. I appreciate it. All right, Gerald, you're next.
I just wanted to add something to that conversation around the C corps, LLCs, S corps. This is something I've been researching lately, and the C corp could be, James, it could be more of a question of asset protection, because that's why it's often recommended you do the LLC versus a sole proprietorship, is because now you start to have asset protection. And what I'm learning about C corps is it offers another level of asset protection, because you and your company are two separate entity, beings when you use a C corp versus a LLC. LLCs typically are flow through entities, meaning that when you go to file your taxes, your business activities flow through your personal return. And it's a little different when you're using C corp. So that the advice to talk to the CPA is perfect, because that could be part of the conversation that you need to have from the understanding standpoint. So I hope to add some value there. But Roya, I gotta put in my calendar Wednesdays at 5:30.
Yeah, we're steady at this Wednesdays at 5:30.
Okay. Yeah, I gotta.
We'll either have a guest speaker or it'll be me speaking to the students. So if it's a guest speaker, I try to open it to the public so that everybody else can also benefit from the wonderful information. So I wanted to ask another question, Crystal, before we let you go, because I know we did say we were going to start by 6:30, but you've just been dropping so many gems, like it's not even funny. And if somebody has a question, please put it in the chat, because like this is a privilege to have Crystal here. Now, you talked about trust, and you said that they're complicated and that there's implications to it, and you kind of have to go back and forth between the attorney and the Crystal. I'm calling you Crystal, but it's a financial advisor, but I'm like, it's Crystal, like there's nobody else. So when people are considering a trust, right? Because we actually that viral video that says the trust, the holding company, the LLCs, right? For the different properties, like that viral video that was created, we actually met at our mastermind the guy who put that together, right? And he was, he did really good in the corporate world, and then he decided to do his own thing, and he was talking to us about trust. And so I know we had like these sizzling conversations that day when he was in there, but I wanted to kind of hear your perspective on how does somebody know? Because you said, that's what you said. You said it could either end up costing them money or saving them money, depending on the situation. So how does somebody know if they should have a trust? Like, I get talking to you, but just like on a basic level, like, because I have a niece of mine who has one property and she wants to get a trust. And I'm like, why do you want a trust? And so does somebody with one property need a trust, or does she need to have like $1 million, net worth, or like what? How does somebody know that that's even something they should consider? Go ahead.
So everyone should have a will and a trust. There's no threshold for it. A will and a trust are entities. A will is not an entity, but a trust is an entity that holds assets. So we have to think of it in that realm. So everyone should have, at the very minimum, a will, but that does not dictate everything that's going to happen. It's what you wish to happen. And a trust is going to be its own entity that can have ownership of assets. So when we think about it like that, whatever you want to put in the trust then owns. So when the trust owns it, you have to understand, what does that mean? So when we talk about real estate, putting it in a trust is there for protection and estate transferring purposes, but it's owned by the trust. So if you no longer own it, you can't use it in the same manner that you could when you owned it. So if you own, so it's just like with the LLC in a property, right? If you live in a property, if it's your primary residence, you get certain tax implications, for your property taxes and stuff like that. In certain states, they give homestead exemptions for it being your primary residence. The moment you put it into an LLC, the moment you put it into a trust, you are exempting yourself from those tax savings because it's not your primary residence any longer. So that's what I'm talking about, where you want to be aware of what you're doing, why you're doing, and what you're trying to accomplish in order to make the decision of whether or not that makes sense.
You just gave me the perfect answer for her. She's 100% disabled, a veteran, and she will not be tax-free if she puts it into a trust. So there's a reason. That's so crazy. Like, that was such a good gem. Crystal, you have said so many. I think you have like 50 videos that are going to come out of this, because you literally have dropped like so many gems and so much good information for like business owners, making 6 figures, people trying to get to the 7-figure mark, people who are at the 7-figure mark, people who are investing in real estate. Like, you've just dropped so much information. I love this.
Thank you. This was so much fun. Like, I could talk about this in my sleep. Literally, this is just what I do. And this is how my mind is wired, And so I do understand, like, not everybody is going to think like this, but these are the parts of business that we have to think about, especially if we want to be successful. This is why, I started going into the fractional CFO, because I'm like, I need for my clients to associate me with everything that involves money, like from the beginning to the end, everything that involves money, I should be involved in it. And when my clients did that and they start bringing me in, and now we're having, all hands on deck meeting, and I'm meeting with their CPAs, and I'm meeting with their bankers, and I'm meeting, with their attorneys. Like, I'm meeting with all, because listen, we gonna get you together. You know what I mean? You're not gonna come up here and pulling the wool over my clients' eyes. Absolutely not.
Wait. So, all right. So let me give some background. The mentorship that we're part of, our mentor is like a financial literacy like genius, and so he teaches about credit, he teaches about like banking plays and things like that. So we know like a lot of stuff about like credit and business banking and personal banking and tricks and tips and plays and things that you can do. And so, you know, when you step into that, we were talking at the last mastermind, and we were talking about their banking situation. And I don't know if you want to disclose, because we haven't said who your client is or anything, right? So I don't know if you want to disclose kind of like how the bank was asking for their social security number.
Oh my God.
They were making 7 figures, and they only approved them for $100,000 loan, and they wanted their personal information. Like,
Yes.
that's ludicrous. Somebody working at McDonald's can get $100,000 worth of credit, believe it or not.
So the thing is, thankfully, I was there to be their middleman, right? Because the client didn't know any better. They were getting ready to do everything that they were being asked to do. But I was the liaison, and I'm talking to the banker, and she's telling me that they need to run a hard inquiry on his credit. And I'm like, but why? Because, and here's her excuse. She said they qualify for commercial credit, and commercial requires their personal credit to be ran. I said, that don't even make no sense. Like, that's an oxymoron. You can't even tell me that regular business credit requires them to have their personal credit. But now they've surpassed that because they made over a couple million. So now they're in the corporate credit. And you're telling me that that corporate credit requires a personal guarantee? That don't even make no sense. And she was like, well, is there a reason why you don't want to run their credit? I said, because they have business credit. They have business credit already established, and they have revenue out the wazoo, and his actual credit is good. He's over 700. So you've already done a soft pull. So you know that he doesn't have any issues. So why exactly? What are you looking for? Oh, we need to make sure they don't have any bankruptcies or anything. I said, but can you see that in the soft pull? Yeah, but we have to, it's just part of the process. I said, no, don't worry about it. Don't worry about it. We'll go somewhere else. You're not going to play these games.
And didn't you take them to another bank?
Sure did. Don't play with me. Like, I was like, wait a minute.
People don't understand, when you go to a bank, you're a customer. Like, you are their client. They are there to serve you. You literally pay them to do service with them. They're not doing you any favors. Banks are not doing you any favors. So you get to pick and choose who you want to do business with. And it's based on who's going to treat you right, who's going to give you the best products, who's going to give you the most access to capital. Like, that's how you make your decisions.
And this is how she really tried to be slick with it, because she had called my client and he was like, well, I got to call Crystal before I move forward, right? So he called me and he told me, and I'm like, no, that don't make no sense, because before I even went to her, I asked her, do they have EIN-based products so that it does not involve his personal credit? And so she said, yeah. So I'm like, okay, no, from what she told me. So then so I call her and I'm like, yo, you just told my client, that they need to run his credit. And she was like, oh no, I was trying to explain that we need to do his Equifax. I said, are you talking about his business Equifax? And she was like, yeah. I said, oh, okay, we could do the business Equifax. So then when I called my client back, I told him, he said, nah, that's not what she was saying. And I said, okay, put it in writing, because he was like, I'm gonna just respond to her in an email. I'm like, okay, put it in writing that you only want the business, you only give permission for the business. So then she comes back, oh, well, I gotta double check and make sure. Nah, see, you're not gonna play me. Like, what you're not gonna do is play me. And I told my client, I said, I don't even trust anything she's saying anymore, because everything she's already told me has been untrue. So we just gonna move around. We not even gonna keep entertaining this.
I just saw a video with Marcus, our mentor, and he was getting interviewed, and he was talking about how he used to be a banker, and he thought that bankers like knew all of these things. And he's like, I realized they don't know shit. He literally said they don't know shit. And so you got to remember, people are just employees doing what their employer tells them to do. Like, it doesn't mean that they're holier than thou, or that you should be scared, right, to ask them for things, or, to get certain benefits. So, it's super important to have this money team behind you. Just to recap again, because we definitely have run over on time, but the money team that you need is a financial advisor, which would be Crystal. You can find her on the TenFigures group. It's a free community I have on Facebook, trying to get to 1,000 members right now. We are at Where are we at for numbers? So great. Here we go. Right now, I started at 100 and something when we first talked about it, and that you've been there, you've seen the journey. I'm at 633 right now. So I would love to get to 1,000 as soon as possible. My mentor says I have to get to 1,000. I'm working on it. So hopefully we'll get to 1,000 soon. And combined, we have, I'll just show you guys really quickly, because I'm super proud of this. The 10 figures, the 10 figures club, the point of it for me is to bring, is to create a community of people who combined all together, we have 10 figures worth of real estate assets combined, right? And so that's why all these financial conversations are super important, and things that we wanna talk about. It's not pulling up. It's okay. All right, moving on. It's okay. But we have $79,500 in real estate assets. So that's really cool. And actually, we went up to like 85 already, but I haven't updated it because I'm waiting to hit 100. So hopefully we'll get there soon. But yeah, so basically, if you join the Facebook community, Crystal is on there. Her name is Crystal Rose on Facebook. So you can definitely find her. You can do a search for members. And also, she said that for your money team, you also need an accountant or CPA or / CPA. So the person could fill 2 roles. If not, you're going to need 2 different people, right?
Right, exactly. Not all CPAs do bookkeeping, and not all bookkeepers are CPAs. So,
okay, so a bookkeeper specifically. It doesn't have to be an accountant, because I believe an accountant is a certification.
right, exactly.
Okay, so a bookkeeper or a CPA, and if your CPA does bookkeeping, then you're good, and an attorney. So literally you need 3 important people. And she said this is even if you make 5 figures in your business, it preps you to make 6. And if you at 6, wait, no, you said if you're at 6, sorry. If you're at 6, you need this. I apologize. If you're at 6 figures, you need this. It preps you to go to 7. And if you're at 7, you definitely need this. So that's the team that you want. And the attorneys are going to look at contracts. CPAs are going to look at your numbers and you should know every day where you're at in your numbers if you're over or under. And then the financial advisor is kind of like the mastermind that looks at everything and tries to give you a strategy and a plan that best maximizes your dollar. Now, final gem before you leave, because we could wrap it up in 7 minutes. Final gem before you leave. You said that you want to 2 times and 3 times their money. You want no idle money in their account, no idle assets. Now, a lot of people, I'm all about leveraging equity. I'm all about juicing things as much as I can. Every transaction I get paid about 3 or 4 times, if not more. Like, I am all about like getting the most out of situations, right? And so for you, how are you as a financial advisor 2 times and 3 times in people's equity for their real estate portfolio or their sitting money? Like let's say they're letting it die and something that makes less than 1% a year or a month.
Yeah, so the 3 ways of making money is, it boils down to real estate being one. We all know about real estate. Everyone who is wealthy owns real estate, right? The second way is business, and we don't even talk about that in that aspect, but business is how everyone makes money. Either you work for a business or you own a business. Okay, so everybody generates money through a business. Somebody is paying you, or you are generating it for yourself through your own business. And then the third way is the financial markets, the stock market. So when we talk about investing, you need to make sure that your money is cycling through those 3 areas in some way, so you can 3x your money. So if you're able to put your money into real estate, use that money to fund your business, use that money to fund investments, then you're using your money 3 times over.
Perfect. We don't even have to go any further. You just did a mic drop. So I really appreciate your time, Crystal. It was amazing. Thank you guys all for showing up. We had a lot of new people here. I appreciate you guys coming. Hopefully you can join the free community for Facebook. I post things all the time. If you don't know about it, I put off-market deals. I walk through different, I try to give as much education as possible. And I do interviews all the time. So I've interviewed an interior designer. I interviewed a guy who saved $1 million on a teacher salary. I interviewed a guy who makes $1 million in rental income every year, right? So that's crazy, because that's net. That was net. That was not gross. So if I'm correct, I think it was $1 million net. I don't know. Watch the interview, find out. I've interviewed a lot of different people. So a subject to person, somebody who talked about credit card hacking, which was one of my students. She's 24. She crushed it. And so, yeah, there's just been a lot of different interviews that I have. They're on the Facebook community. They're also in the school community, and the school community just has a little bit more. That's funny, because Lori has two foster kids. I think they're pressing buttons on her computer. That's funny. All right, guys, it's been great. Thank you so much. Please join the communities, and we'll see you around. Thank you so much.
Thanks for having me. Thank you.
All right, y'all. Peace.
Bye.